Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China TAIPING interim report. China Taiping Insurance Holdings Company Limited offers a diverse range of businesses and services across various segments. The company's main offerings include life insurance products, corporate retirement insurance, group life insurance, individual insurance, health insurance, accident insurance, and annuities, property and casualty insurance products, compulsory motor insurance, liability insurance, credit insurance, guarantee insurance, short-term accident and health insurance reinsurance products, property damage, life, marine cargo and hull, miscellaneous non-marine reinsurance asset management services, insurance intermediary services, financial leasing, property investment securities, dealing and broking, elderly care investment fund management, back-to-back financing arrangement, insurance broking and agency services. China Taiping Insurance Holdings stock price has increased by over 32.5% in the past year, driven by a combination of factors. The company's strong financial performance, with a 12.2% year-on-year increase in shareholders' attributable profit to HK $6.764 billion, was a significant contributor. Additionally, its successful dividend insurance transformation and optimized general insurance performance have boosted investor confidence. Analyst target price upgrades, such as CICC's 25% raise to HK $28.40, also played a role in the stock price increase. Furthermore, improved investor sentiment and China Taiping's strategic positioning within the global market have contributed to its rising stock price. The company's sustained double-digit revenue and net income growth has also been a key factor in its success. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by the increase in insurance service results, interest revenue, and financial assets not measured at fair value through profit or loss. Additionally, strategic partnerships with large clients have contributed significantly to revenue growth, with HK $37.398 billion in insurance premium and HK $34.384 billion in new pension payment. Domestic cross-selling initiatives have also achieved notable success, generating HK $4.512 billion in insurance sales. On the other hand, revenue decline is primarily attributed to the decrease in overseas insurance revenue, interest revenue, and investment return. TP Indonesia, TP Macau, TP Singapore, and TP UK have all experienced declines in insurance service results, ranging from -5.5% to -16%. Net income and profit margins. A shift towards improvement. The financial performance of life insurance businesses has shown a positive trend with a 3.1% increase in net income compared to the previous period. This growth can be attributed to improved loss ratios and transformation efforts. Meanwhile, profit margins for property and casualty insurance businesses have also seen an improvement, with a 1.5 percentage point reduction in TPI's combined ratio. These changes indicate a shift towards better financial performance, driven by enhanced operational efficiency and risk management strategies. The company is generating a significant amount of positive operating cash flow. In 2025, the net cash generated from operating activities was $60.7 million, an increase from $79.7 million in 2024. The operating cash inflow for 2025 was $15.6 million, while the outflow for 2024 was $12.4 million. Additionally, the company's total undiscounted cash flows from financial assets exceeded its liabilities by over $2 billion. This indicates a substantial increase in net operating cash flow to $1.9 billion in 2025, demonstrating the company's ability to generate positive operating cash flow. The company's debt level and interest expenses have undergone significant changes. While the total financial liabilities increased by 30.3% to $172,865,817, the total debt decreased from $1,238,069,618 at June 2025 to $1,141,391,001 at December 2024. Notably, insurance contract liabilities fluctuated, increasing by 7.7% on one page and decreasing significantly on another. However, a key trend is the decrease in total interest expenses, which dropped by 31% from $1,895,748 to $1,3 $304,758. This suggests that despite an increase in some debt levels, the company's overall interest burden has decreased. The financial performance of the company's segments and regions varied significantly in the recent period. The PRC China segment stood out as a top performer, with revenue exceeding $55 million and a profit of over $12 million. The life insurance segment also showed strong results, with a profit of nearly $11 million. In contrast, the overseas segment struggled, recording a loss of over $215,000 and lower statutory deposits and segment assets compared to other segments. The interdomestic segment had relatively low statutory deposits, but higher segment assets than the overseas segment. Overall, the PRC China and life insurance segments were the clear winners in terms of financial performance, while the overseas segment lagged behind. Management's outlook and strategy. The company's management has outlined several key strategies to drive growth and maintain its market-leading position. Firstly, they aim to lengthen the duration of assets while reducing asset-liability mismatch through active investment. This will be achieved by transforming towards participating products and maintaining industry-leading persistency ratios. In addition, management plans to balance domestic and overseas businesses, optimize life insurance business structure, and increase premium income from national strategies and real economy businesses. The company is also advancing 5 key areas of finance: technology, green, inclusive, aging, and digital finance through pilot projects and new service platforms. A prudent investment style will be maintained, focusing on value investing and long-term advantages of insurance funds. Overall, the management strategy emphasizes a balanced approach to growth, risk management, and innovation, positioning the company for continued success in the market. The company has a history of paying dividends to its shareholders. Specifically, for the year ended December 31, 2024, a final dividend of $0.35 per share was paid. Additionally, holders of perpetual subordinated capital securities also received dividend payments. However, there is no information available on any share buyback activities by the company. That concludes the financial summary for China TAIPING. Feel free to comment below, and I will be happy to answer them when possible.